Hey, welcome back to the channel. Today I'm going to show you something that might challenge everything you've been told about one of the most popular trading strategies out there, the MACD plus EMA combo. You've probably seen it all over YouTube. The 50 EMA must be above the 200 EMA, the MACD must be below zero, and when the histogram flips from red to green, it's time to go long. Set your stop loss at the recent swing low, use an ATR if you're fancy, and go for that sweet 1-2 reward to risk. It sounds logical, clean, and honestly, it feels pretty safe. But here's the catch, and it's a big one. Just because a strategy is popular doesn't mean it's profitable. In fact, my testing shows something really interesting. The more people who follow this strategy blindly, the more predictable they become. And in trading, predictable traders are easy targets. You see, while the herd is entering long trades at the MACD signal, the bigger players are watching, waiting, and pushing price just enough to trigger all their stop losses. The very structure of the setup becomes not a setup for profit, but a roadmap for liquidation. Most beginners never backtest. They take strategies straight from influencers who sound confident but rarely show data. And here's something even more revealing. Many of these strategies are popular because they're easy to sell, not because they actually perform well in real market conditions. When you zoom out, you'll notice something. The same swing low where you're told to place your stop, that's exactly where the market loves to dip before taking off. Coincidence? Or is it by design? The truth is, trading isn't just about indicators lining up. It's about understanding behavior, crowd behavior. And if too many traders are doing the same thing at the same time, it creates opportunity. Not for them, but for the ones doing the opposite. That's why I look for stop hunts, fake outs, and setups where it seems like everyone just got stopped out. Because often that's when the real move begins, not when MACD says go, but when the majority just got wrecked. If this makes you question the strategies you've trusted so far, good. That's how growth starts. This isn't about shaming new traders. It's about waking up to how markets really work. So instead of asking, where's my entry, start asking, where's everyone else likely to lose? That's where you'll find the edge, not in what's obvious, but in what's overlooked. Want to see how to build a strategy around this idea? Trading where the crowd gets trapped, not where they get in. Stick around. I'll show you how to reverse engineer these traps into high probability entries. Because sometimes the smartest move is to do the opposite. Disclaimer, just a quick heads up. This strategy is something I personally use and believe in, but it's not financial advice. I'm not a financial advisor, and this isn't a recommendation to buy or sell anything. Always do your own research, practice proper risk management, and if you're unsure, talk to a professional. Trading involves risk, and you should never risk more than you're willing to lose. This is all for educational purposes only.